Happy Monday out there, folks. This is Darius Dale here to present our macro minute for Monday, March 21st, 2022. Happy spring out there. It's first day of spring. Some maybe hope spring's eternal. We shall see. Starting with markets this morning, we have stocks down, commodities mixed, crypto up this morning, dollar up, global bond yields up. Big news this morning. No real news yet, but we got a bunch of central bankers and policymakers making some important comments this week. We had Fed Chair Jerome Powell and Atlanta Fed President Raphael Bostic. They're both presenting this Monday. Tomorrow, we got European Central Bank President Madame Lagarde. She'll be speaking at the BIS Innovation Summit. Bank of England Governor Andrew Bailey and then Fed Chair Powell will be speaking at the panel, the BIS panel on Wednesday. And then lastly, Joe Biden is over in Brussels this week, and there'll be an emergency NATO meeting on Thursday. So obviously, a lot of a lot of stuff going to come out of these this commentary. What I'm looking for out of Fed Chair Powell is any updates on the pace and timing of quantitative tightening. That to me is very unresolved as it relates to the markets. Same ordeal with respect to ECB President Lagarde. What's the outlook for European rates over that on that side of the pond? And then lastly, with respect to Bank of England Governor Andrew Bailey, how close are they towards the end of their easing cycle? Obviously, UK growth is starting to come under question here. And then lastly, to me, it's obviously going back to what we discussed on Friday. President Biden and NATO's sort of willingness to sort of play tough with China. Obviously, China, Taiwan is the real tail risk in markets. But so big movers this morning. WTI is back up a bit, up 4%, back up big rather, up 4%. That's dragging on MSCI Emerging Market Index down 2%. Got new lows for the 10-year, 2-year Treasury term premium. So continue to move towards pricing and recession risk there in the U.S. bond market. On the macro front, nothing from a data perspective, but I thought it was really interesting that People's Bank of China held its benchmark 1-year and 5-year prime lending rates unchanged at 3.7 and 4.6% respectively. Recall that we were watching Monday's medium-term lending scheme quotas and rates for our first clues regarding Beijing's willingness to legitimize its recent rhetorical support for Chinese stock market. The Shanghai Composite closed flat on the day. Hong Kong Hang Seng closed down nearly 1%. Both of those moves, in my opinion, suggest that the early read is that the PBOC is unlikely to materially ease monetary policy, which is something our work finds is a necessary precondition for a Beijing-backed bull market and global risk appetite. So what do I mean by that? Let's take it to the chart here. What I'm showing really quickly, the blue line in this chart shows 3-month Shibor. That's our proxy for, sort of all the tools, schemes, and tricks and measures that the PBOC can use to influence Chinese monetary policy. It all shows up in 3-month Shibor. We got about 85% of Chinese bank private non-financial sector credit on the mainland is on Chinese bank balance sheets. So interbank lending rates are the policy rate for lack of for all intents and purposes. And what you typically see, so the dotted red line is the beginning of the easing cycle. The blue line is the end of the easing cycle in China. And what you typically see is that you don't really want to buy the beginning of the easing cycle in China because historically that's not been the buy signal. Only in 2011, 2012 was that actually a buy signal from the perspective of using the S&P 500 as a proxy for global risk appetite. So not only are we not getting the beginning of the easing because we haven't seen any real move yet out of the PBOC, but we're certainly not towards the end of that process as well. You typically see a 200 to 300 basis point decline in 3-month Shibor before investors are really, sort of starting to see the sort of green shoots associated with the Chinese economy and ultimately the global risk appetite that should come off that. So spent a little more time that I don't really like, but I do believe this is a super important catalyst for the month of April for the next few weeks as well. So moving to today's probable range setups, S&P 500 that is still bearish, FAMS overbought 10% downside in its probable range. It's the other upper boundary of its probable range. WTI still neutral, VAMS minus 20% of downside versus 17% of upside. Bloomberg Dollar Index bullish, VAMS minus 0.4% of downside versus 2% of upside. 10-year Treasury yield bullish, FAMS minus 31 basis points of downside versus 14 basis points of upside. Bitcoin still bearish, FAMS minus 17% of downside versus 1% of upside. Ethereum still bearish, FAMS. That's overbought with 22% of downside in its probable range at the upper boundary of its probable range. And then lastly, gold is oversold at the lower boundary of its probable range with 8% of upside. That is bullish, FAMS. We mentioned that broke out late last week. So with that, Darius Dale presenting our macro minute for Monday, March 21st, 2022. Best of luck out there this week.